Hi there, you're watching Your Trades with me, Shreyanshi Singh and Ankita Saxena, and over the next half an hour, we'll help you make sense of the day gone by in trade. Firstly, let's take a look at an important cue that we've been waiting out for, and that was, of course, the US Federal Reserve's bumper rate cut. That is something that we were penciling in and we've been talking about all through this week. Federal Reserve, of course, kickstarted the much-anticipated series of interest rate cuts with that supersized 50 basis points reduction. Central Bank Chairman Jerome Powell as well detailed the move, says that it is meant to show policymakers' commitment to sustaining a low unemployment rate now that inflation has eased. And that particular cut is something that we were keeping a very close eye on. Remember, outside of the emergency rate cuts during the pandemic, the last time that the FOMC cut by half a percentage point was in 2008, and that was during the global financial crisis. The decision, of course, lowers the federal funds rate to a range between 4.75 to 5%, and that largely is the most important cue that we were looking at today in trade as well. Let's also take a very quick look at what the market did today, and when you take a look at the Nifty, ended above the 25,400 levels, and we did see a little bit of a cool off coming in. When you take a look at the Nifty, after hitting that fresh high, so when you take a look at the list of gainers, sectorally speaking, you do have consumption making it to that list, FMCG as well, realty, auto. They were doing quite well for themselves, but what was not doing all that well was media, PSE, as well as PSU Bank. When you take a look at the top gainers in trade, then you do have NTPC, Kotak Mahindra Bank, as well as Titan that were holding up quite well, even Nestle as well as HUL that were holding up quite well in trade today, and that is the kind of handover that we largely saw. And when you take a look at the losers, of course there was Adani Ports, ONGC, BPCL, Coal India that make it to the list of losers in trade, and that largely is the kind of handover that we had today, Ankita.
Yes, absolutely, Shreyanshi. In fact, another very volatile day of trade after yesterday also, in fact, we touched yet another record high levels today before we gave up all those gains. In fact, we were down almost 200 points from the day's highest point on Nifty, but we did see the Nifty Bank give the outperformance yet again. Just like yesterday, Nifty Bank was outperforming the benchmarks, and it was partly on the back of the fact that ICICI Bank was trading at its all-time record high levels. It crossed its 9 lakh crore market cap yesterday. Broader markets, were really taking it on the chin, and this underperformance from the broader market has been there for a few sessions, and we saw that coming in today as well. The broader markets ended the day with cuts of almost 1%. Also, the telecom players like Vodafone, Indus Towers were reeling under pressure on the back of Supreme Court rejecting the AGR plea. On the back of that, these two were reeling under pressure. Also, we did see, the FMCG pack or the safe haven that was gaining up in trade today. So that was a top sectoral gainer, and NTPC was also in news. It was a top Nifty gainer on the back of its subsidiary filing for its DRHP. So NTPC, Kotak Bank, Titan, Nestle, HUL, the consumption pack was in focus, was the top Nifty gainers. On the losing side, there was BPCL, Coal India, ONGC, all the oil marketing companies that were in focus today as well. So that was the losing side of Nifty, but that's where largely the market was at. We've ended the day at 25,415. That's where Nifty ended the day at. So that was a roundup of the market, but we'll move on then. We'll move on to the stocks that we're closely tracking, and on the technicals then, Shrishti is joining us on the technical charts. Shrishti, tell us what are you seeing on the charts for us?
So we are spotting two counters. One is on the breakdown side and the other one is on the breakout side. Firstly, let's have a look at the breakdown side, because the markets have given off their gains that we have seen in today's trading session. And on that front, we have spotted BEL as a breakdown stock. Why so? Because the stock was seen to be holding a very crucial support for itself, which was seen to be at 280 odd levels. In today's trading session, it was a sharp knock exactly from those levels. Breakdown of its crucial support level is what we have seen. Other than that, a rejection exactly from its 20-day moving average is also distorted by this particular structure that you are seeing on the charts. So this is the first stock that we wish to highlight on the breakdown side. We're moving on to the next counter then, and that is indeed a breakout stock, because AU Small Finance Bank was one of the star performers today. It was up almost 3 to 4% in today's trading session. And what was interesting to see, though we have highlighted AU Small Finance Bank in the past as well, given the kind of run-up that the stock has seen, but you will see that the stock is seen to be consolidating for the past 7 to 8 days, is in a very tight range. And after the Fed rate cut was announced, AU Small Finance Bank was expected to be one of those beneficiaries on the fundamental side, but on technical as well. The stock was very well supported by a good move from the word go. The stock just built on to its gain, and this move was also supported by a long build up on the derivative side. So this is what we have spotted on the breakout side. So these are the two stocks, guys. Back to you.
Alright, so AU Small Finance Bank, star performer there from the word get-go, and you did also have BEL on the breakdown side. But moving on then, the Fed had the firepower to cut interest rates to signal that they will support growth, and that is the word coming in from Adrian Mowat, EM equity strategist. Listen into what else he, as well as Jahangir Aziz, MD and Head Emerging Market Economics Research, JP Morgan, had to say then about the Fed's trajectory and what lies ahead then.
Look at another way that the Fed had interest rates at a high level. This then allows them to have a fair amount of firepower to cut those interest rates to signal that they're going to support growth and provide that confidence that's all important. So as we go into 2025 and the Fed is moderating interest rates, inflation continues to come down, so the impact on real income moderates from inflation. It looks for an outcome into 2025 of this, not even a soft landing. You know, the economy is still growing. I think that is a favorable outcome.
This was the way in which they would go to neutral. They would start with a 50. We, in fact, have another 50 for the next meeting and 25 basis points. So we have a pace that is significantly faster than the Fed. But essentially, the first 125, 150 basis points of rate cut is this move towards neutral. You know, there are questions about where the neutral is. We will worry about that once we get the first set of rate cuts done. So it wasn't very surprising to us. In fact, it was, you know, in line with what our baseline was, and also the commentary that this is not an economy going into recession. This is an economy that's slowing down, but it's still strong. Labor market is still strong, as are the consumers.
And well, the Fed rate cut is not the only thing that matters, says the Chief Economic Advisor V. Anantha Nageswaran. He also says that the rate cut was priced in and the stock markets are moving ahead of the Fed's decision. Let's go across and take a look.
The Fed rate cut is not the only thing that matters. We have geopolitical conflicts everywhere, and there is an all-important election that is coming up in the US in November. And in general, the global economy has been slowing. The trend growth has been coming down. The rate cut by the Federal Reserve was much awaited, but I mean, one can also discuss whether whether things should be that way, that the interest rate cut of 50 basis points should really be something that all of us should be hanging on to. So I think it will have different implications depending on how much of it's already been priced in. But I think much of it was priced in already. Yes. So in that sense, the interest rate curves have moved ahead of the Fed action. Yeah. The stock markets had moved ahead of the Fed action.
Alright, then that was a word coming in from V. Anantha Nageswaran, who's the Chief Economic Advisor. But it's time for a quick break right here on Your Trades. When we come back, we'll take a look at the big story of the day, so you don't go anywhere.
All right, welcome back. You're tuned into Your Trades. Let's move on to the top story of the day. Supreme Court has rejected telecom operators' plea seeking a recomputation of the AGR. For that, my colleague Somit Sarkar is joining with the details. And on the back of that, Vodafone Idea and Indus Towers were taking it on the chin. Vodafone traded with cuts of almost 20%, and Indus Towers was trading with cuts of 9%. But tell you what, Somit is joining us with the details of the entire Supreme Court decision. Over to you, Somit.
Well, Supreme Court has dismissed the curative petition filed by the telecom companies for recalculating the AGR dues. Now, what does this mean for the companies is that they'll have to pay the AGR dues as calculated by the Department of Telecommunications. Now, if you see the difference amount between the amount calculated by Department of Telecommunications and by the companies, it's more than 30,000 crore rupees. In fact, for Vodafone Idea, the difference is nearly 37,000 crore rupees. Now, this payment for AGR dues has to be started from FY27, and the annual installment for Vodafone Idea stands at close to 17,500 crore rupees. Had this curative petition approved by the Supreme Court and the case would have been in favor of Vodafone Idea, then the amount would have been lower by nearly 8 to 8,500 crore rupees, and that would have resulted into significant cash flow savings for the company. However, that will not happen right now, and that's the reason we are seeing this kind of a fall when it comes to the share prices of Vodafone Idea. Now, Vodafone Idea was also looking to raise close to 20,000 crore rupees from lenders, but the lenders were still sitting on the sidelines as they were waiting for a positive outcome of this case. Now, given the fact that there has been no positive outcome, it could be difficult for Vodafone Idea to go ahead and do a debt raise of close to 20,000 crore rupees, which was very much crucial for the company's capital expenditure plans going forward. And given the fact that now the capital expenditure of Vodafone Idea comes into question, the revenue or the income for Indus Towers is also comes under question, and hence we are seeing such kind of a downtick when it comes to the share prices of Indus Towers as well. Now, Indus Towers also has some dues recoverable from Vodafone Idea, so that is also one of the concerns and one of the reason why we are seeing pressure on share prices of Vodafone Idea currently. So far, the share prices were down almost around 15 to 20 odd %. However, we have seen some recovery in the share prices for both the companies, that is Vodafone Idea and Indus Towers in trade.
Alright, thanks Amit for that roundup coming in. In fact, we also caught up with Balaji Subramaniam of IIFL Securities as well as Sushil Choksi, Indus Equity Advisors as well. Let's listen into what they had to say then.
My estimate is that the annual payout from next year, assuming that the moratorium is lifted as per original plan, would be around 16,000 crores. And that is just on the AGR front. If you add the spectrum payouts also, the number goes up to a much higher number. So the company has given these numbers. It would be around 28,000 crores in FY26, and from FY27 onwards, it would be around 42,000 crores. So these are pretty big numbers, and a favorable outcome would have reduced these numbers by around 8,000 crores. All that capex underway, even with the tariff hikes coming in and with an AGR relief, they would still have faced difficulties in making these payments, and it results in a hit of about rupees 5 per share. And now I think the key monitorable would be what happens as far as the debt raising plans of Vodafone are concerned.
In today's condition, Vodafone Idea will have to do some kind of a fundraise, which would be more from shareholders. Government of India, Idea, that is Birla Group, and Vodafone will have to shore up the balance sheet to strengthen, to repay this amount, unless the government gives time to pay out. And that's one possibility which can be considered by ministry at a later date. But this has happened for the companies, and I'm sure to survive, you have to earn more. And competition is already inching up with the tariff hike, and they're looking towards betterment. So if any kind of burden comes to one player, either you lose consumer base or all of them, three of them will raise the rates. I am sure the government of India's intent is to keep all three, specifically Vodafone, to exist, and they will make sure that all kind of support is there, because the shareholder also, they'll have to do something about it. So I'm quite sure that outcome will be positive, but from shareholder perspective, it may be not positive for short term.
All right, IIFL Finance was another counter that was reeling under pressure, trading with cuts of over 6%, and this was on the back of a Fitch rating note. The pressure from RBI curbs on gold lending weighs. My colleague Anurag Joshi is joining in with the details on that.
So IIFL Finance fell as much as almost 9% on fresh concerns, and these are mounting concerns about the credit profile of the company. Now, the concerns and the worries among investors about the credit profile of IIFL Finance stem from one key factor, which is the regulatory restriction. There's the RBI restriction on the gold loan lending, gold loan backed lending that the company did, and this is one of the key reasons which has also dragged down the company's stock price also. In fact, just yesterday, Fitch Ratings has come out with a note where they have placed the company's credit ratings at a rating watch negative, that those ratings remain at a rating watch negative, and Fitch noted that the action is due to the ongoing pressure on the credit profile, and Fitch is currently rating IIFL Finance at B+. There are the local rating companies, CRISIL, ICRA, India Ratings and CARE, they rate IIFL Finance at AA, and there were media reports that the company could face a rating downgrade. There's a threat of a rating downgrade as soon as next week, and also that report had flagged the risk of job cuts at the company.
All right, thanks Anurag for that update coming in. So that stock was down and out in trade, cuts of about 6% coming in for that one. But speaking of down and out, there was another counter, that is Nazara Technologies, that was under pressure today. Downtick of about 5% coming in for that one, and they've also raised 900 crore rupees via a preferential issue. In fact, we caught up with Nitish Mittersain, who's a joint MD as well as CEO at Nazara Technologies. He talks about how the company has a focused approach to M&A and will be moving fast wherever they see an opportunity. Listen into what else he had to say then.
We have, a fairly strong team that's working on this. We have a very decentralized approach to M&A because we do it at Nazara level, but many of our subsidiaries that are generating their own cash also redeploy that cash into acquisitions. We don't have a specific count or target of acquisitions. We believe we are patient in terms of, trying to find businesses that really fit our framework of acquisition and only then act. In the last year, we had raised capital and we were, very patiently creating a deal pipeline where we looked at a lot of companies. And this year we got more into action mode where we are actually executing some of the companies we liked. So yeah, no specific target or numbers of companies that we're looking to acquire, but wherever we see a good opportunity, we will move fast.
And well, we also had the management of CEAT. We had Arnab Banerjee, who's the MD and CEO, who sees the margin pressure on margins and strong top-line growth going ahead. He also expects the OEM demand to be flattish and replacement demand growth to be in single digit. Let's go across and take a look at what he had to say.
OEM demand will be flattish, but the replacement demand is not flat. We are witnessing growth in healthy single digits. And as far as CEAT is concerned, we would like to gain share in the OEMs. Pressure on margin for the time being, though the top-line demand outlook looks strong.
All right, then that was the word coming in from the management at CEAT. Let's move on then and let's get to the list of counters that were buzzing in trade. Now you've got the likes of NTPC, sweet gains coming in from Balrampur Chini as well. So we have Gaurav who's standing by with an update and a list of the counters that were buzzing away in trade. Gaurav?
Well, yes, NTPC is going to be in focus because NTPC's subsidiary, NTPC Green Energy, has filed for a DRHP for 10,000 crore rupees. Now, the entire amount is going to be of fresh issue and NTPC shareholders can actually benefit from this. And as a result, we saw some uptick in the stock price. Up next, we have is Uno Minda because company has now approved 3 manufacturing plant setup. First is going to be in Indonesia worth 210 crore rupees. Second is going to be in Karnataka worth 280 crore rupees. And third is going to be in Haryana worth 120 crore rupees. As a result, we saw some uptick in this counter as well. Up next we have is First Source because management exclusively told to ET Now that they are expecting profitability to increase almost 2.5 times by FY28 and at the same time they're expecting 15% growth rate with 14% margins for the business. As a result, we saw some uptick in this counter as well. AU Small Finance Bank is also in focus because Motilal Oswal maintained its buy rating and a target price of 830 rupees. What they say is that high yielding profile is going to support the net interest margin and at the same time bank can actually deliver the loan growth of around 24% with PAT CAGR of around 32% over the next 2 years. As a result, we saw some uptick in this counter as well. Lastly, let's also focus on some counters like Balrampur Chini because as per sources, the Food Ministry has set a proposal to increase ethanol prices almost by 2 to 5 rupees per litre. So definitely watching out on all these counters on the back of the news flow as well as brokerage note that we have received today.
All right, with that, it's a wrap on this edition of Your Trades. Shreyansi and I will take your leave. Thank you so much for tuning in.